Welcome, deep divers. Ever come across one of those crypto predictions that just stopped you in your tracks? Not just bullish, but like really bold.
Yeah, something that makes you kind of rethink everything.
Exactly. And you wonder, hang on, could that actually happen? Well, today, that's exactly what we're diving into. We're tackling a huge prediction. A staggering $20 cycle target for XRP.
Wow, yeah, that's not just a little bump. That's massive compared to where it is now.
Totally. It's the kind of number that, if it happened, would really shake things up. Pun intended, I guess.
Oh, nice one.
So on this deep dive, we're going to unpack two things. They seem kind of separate at first, but trust me, they're linked. First, this ambitious $20 XRP target. We'll get into the why behind it. And second, a really important lawsuit dismissal involving Bitcoin, specifically something called strategy Bitcoin, that's having a big impact on how institutions see it.
Right. And our goal today really is to give you that shortcut to help you understand the deeper currents moving the market, not just the headlines.
Yeah, going beyond the surface level stuff.
Exactly. So we'll break down the logic behind the $20 XRP thing, history, adoption, all that. Then we'll look at what this new legal clarity means, especially with that lawsuit getting tossed out.
Right.
And then the key part will connect those dots, show how these two things together could really boost investor confidence, maybe pull in more institutions, and, shape the whole Web3 space.
And we're not just winging it here. We've dug into some serious sources. Our main guide is this piece, XRP's $20 target and crypto legal clarity, from our own crypto robot prep files.
Yeah, that prep work pulls from a lot of places.
It does. We're talking Cointelegraph, official stuff from Ripple Labs, those detailed CoinShares reports on fund flows, analysis from Masari, Glassnode.
The deep data, guys.
Right. And even some big picture stuff from the IMF and BIS on cross-border payments and digital assets. So, we've done the homework.
Definitely. Should be a good one.
All right, let's jump right into the big one. That prediction that's making waves. Analysts are floating a $20 cycle target for XRP.
Yeah, it's a number that grabs your attention for sure.
I mean, think about it. From there, XRP usually trades, $20 is. Well, it's astronomical. It would completely change its ranking, put it right up there with the absolute biggest names.
It really would. And look, it's easy to just dismiss that as, hopium, just wishful thinking.
Right, that classic crypto term.
Yeah. But the analysts pushing this aren't just pulling it out of thin air. They're pointing to historical cycles.
Okay, so what does that mean exactly? Based on past performance.
Sort of, yeah. They're looking back at previous bull runs. Remember 2017? XRP went absolutely nuts, over 36,000% from its low point to its peak, around $3.84.
Crazy numbers, I remember that period.
And then in 2021, maybe not that extreme percentage-wise because the starting point was higher, but still, it did more than a 10x from its low, hitting almost $2.
Okay.
So these analysts are basically modeling out a scenario for, say, 2025 or 2026, where XRP sees a similar scale of percentage gain. They use tools like Fibonacci extensions, projecting potential price levels based on those past moves.
Right, the fib levels.
Yeah.
Technical analysis stuff.
Exactly. But it's not just, it happened before, so it'll happen again. It's more about understanding the dynamics of these cycles and wondering if the current fundamentals, especially adoption, and the legal clarity we'll talk about, could fuel an even bigger move this time. Maybe one that breaks those old highs significantly.
Okay, so historical patterns are part of it.
Yeah.
What else? You mentioned adoption.
Yeah, and this is key. Adoption growth. We're not just talking about people buying and holding, hoping the price goes up.
Speculation, basically.
Right. This is more about XRP actually being used. Its utility as a payments and settlement layer. Think about sending money internationally right now.
Slow, expensive, kind of a black box sometimes.
Exactly. It relies on this old correspondent banking system. XRP and RippleNet, which uses it, offers a way to do that almost instantly, super cheap, using something they call on-demand liquidity, or ODL.
So banks don't have to park money all over the world.
Precisely. As more banks, remittance companies, payment providers start using this tech to fix their old clunky systems, that creates real demand for XRP itself, not just speculation, but actual use. And that kind of fundamental demand could support a much higher price.
Makes sense. Utility driving value.
And the third piece, maybe the most important right now, is the renewed legal clarity after Ripple's SEC battles.
Ah, yes, the elephant in the room for a long time.
Totally. Before that court ruling last year, there was this huge cloud hanging over XRP, especially in the US. Is it a security? Is it not? Institutions hate that kind of uncertainty.
Yeah, they need clear rules.
Exactly. So when Judge Torres ruled that XRP itself isn't necessarily a security when sold on exchanges to regular folks, that was massive.
It really was a turning point.
It dramatically cut down the regulatory risk. It basically gave a green light, or at least a much clearer yellow light, to big players who were sitting on the sidelines because of the legal fears. It made XRP seem like a much safer bet from a compliance standpoint.
So history, utility, and now legal clarity. Those are the pillars for this $20 idea.
That's the core argument, yeah.
Okay, this is where it gets really interesting for me. Because if XRP hits $20, you said it changes the rankings. What does that actually look like?
Well, it would imply a multi-trillion-dollar valuation. Let that sink in.
A multi-trillion.
Wow.
Yeah.
We're not just talking about it being a top 5 crypto. We're talking about it potentially being number 1 or 2.
Seriously. Bigger than Ethereum. Challenging Bitcoin.
Potentially, yes. Let's do some quick math. There are about 55 billion XRP out there, right?
Roughly, yeah.
So 55 billion times $20, that's $1.1 trillion market cap.
Okay, $1.1 trillion.
Now, think about Bitcoin's peak market cap. It got close to what, $1.3 trillion in the last bull run?
Right.
And Ethereum's peak was around $550 billion. So $1.1 trillion for XRP would blow past ETH's all-time high and put it right in the same league as Bitcoin's peak.
That's genuinely disruptive.
It is. And compare it to other assets, gold is maybe $13 trillion total market cap. $1.1 trillion is almost 10% of that. Or think about the global FX market, trillions moving every day. If XRP captures even a small slice of that cross-border settlement volume,
The valuation starts to make a bit more sense, maybe?
it provides a rationale for it, at least. It positions XRP not just as another crypto, but as a potential pillar of a new global financial infrastructure. It forces institutions to consider it alongside BTC and ETH, not just as some speculative altcoin. That's the core of the $20 argument that its utility could justify that kind of massive scale.
It's a really powerful narrative. But still, $20 feels like such a leap. For many people, it probably just sounds like fantasy. What gives analysts the confidence to even suggest it? Is it really more than just hope?
It's a fair challenge. And look, we always need caveats, right? History rhymes, it doesn't repeat. But what feels different this cycle is maybe that convergence. You've got the tech maturing with RippleNet, you've got way more institutional eyes on crypto generally, and you have that huge legal overhang largely lifted, at least for now.
So it's speculation potentially boosted by real fundamentals this time.
That's the idea. Speculation underpinned by utility and clarity. But yeah, the path to $20, if it happens, won't be a straight line. It'll need massive institutional buy-in, a roaring bull market across the board. It's still a huge if, but the argument for its potential is arguably stronger than it's ever been.
Okay, so I have to turn this to you, our listener. Hearing all this, the history, the utility, the legal angle, the sheer scale of $20, do you think XRP can actually hit that mark? Or is it just, hopium, that crypto optimism getting a bit ahead of itself? What's your gut feeling on this?
All right, let's shift gears slightly, but stay on this theme of positive signals. The second big piece we wanted to unpack is this news about a lawsuit dismissal. A high-profile lawsuit against Strategy Bitcoin was dismissed.
Right. And Strategy Bitcoin, from what we gather, seems tied to a company holding a lot of Bitcoin, maybe facing claims about how they managed it or traded it.
Okay, so maybe not Ripple versus SEC level drama, but still important. Definitely. Because think about it. A major company, maybe publicly traded, holding loads of Bitcoin, if they get sued over that strategy and the case gets tossed out, that sends a message.
What kind of message?
It connects back to that core idea. Legal clarity in crypto often sparks bullish momentum. Why? Because the biggest hurdle for big money, for institutions, has always been the fuzzy legal picture.
The regulatory uncertainty.
Exactly. Crypto felt like the Wild West. Lawsuits popping up, regulators making noises. It spooked the serious players. When a significant lawsuit involving Bitcoin, the kingpin asset, gets dismissed, it's like removing one more roadblock.
Makes it seem safer for the suits to get involved.
Precisely. Banks, investment funds, big corporations, they need clear rules of the road. Fewer legal threats mean fewer barriers to entry for them, whether they want to buy Bitcoin directly, offer crypto services, or use the tech. Less legal risk makes it all much easier to justify. It signals a shift, like maybe it's not so wild out here anymore.
Okay, so it chips away at that Wild West image.
Yeah, and it's not just a one-off thing. We're seeing a bit of a trend here. Dismissals show the courts are starting to side more often with crypto-native businesses.
Interesting, so the judges are getting it more.
It seems that way. For a while, courts were kind of struggling, trying to fit this new tech into old legal boxes, like securities laws from the 1930s.
Right. Square peg, round hole.
Totally. But now, maybe as the industry matures, as the lawyers get better at explaining it and judges just see more cases, they're getting more sophisticated, they're starting to understand the nuances.
Like distinguishing between different types of tokens or projects.
Exactly. Recognizing that not everything is a security, or that decentralized networks operate differently. Each dismissal, especially if it comes with clear reasoning from the judge, helps build legal precedent. It creates a more predictable environment.
So it's not just about winning one case, it's about building a body of law.
That's the idea. It helps legitimize the space in the eyes of the law, which is crucial for long-term stability and growth.
And what does that stability mean for the big money? The institutions you mentioned, the ETFs, the banks, the funds.
Oh, it's huge for them. Think about launching a Bitcoin ETF, or a bank offering crypto custody, or a pension fund deciding to allocate 1% to Bitcoin.
They have massive compliance departments, lawyers looking at everything.
Exactly. Legal risk is probably their number one concern. Their due diligence is intense. Any gray area can kill a proposal. So every time a lawsuit is dismissed, every time there's a positive regulatory development, it de-risks the whole proposition for them.
Lowers the hurdles.
Right. Makes it easier for them to say yes to crypto, to justify it to their bosses, their boards, their investors. This is how you gradually open the floodgates for that serious institutional capital to flow in. Not just for Bitcoin, but it sets a tone for the whole asset class.
That makes a lot of sense. It's not just about the individual company involved in the lawsuit, but the signal it sends to everyone else watching. But, we've heard about shifts in crypto regulation before, and sometimes it feels like 2 steps forward, 1 step back. Is this really different? Are we maybe reading too much into one dismissal?
That's a very fair point. Caution is always warranted in crypto. But what feels potentially different now is the accumulation. It's not just one isolated case. We're seeing rulings in different places, courts grappling with the tech in more detail.
So it's the pattern, not just the single event.
I think so. And importantly, courts are starting to articulate why they're ruling certain ways. They're making distinctions like how a token was initially sold versus how it trades later on exchanges, or recognizing genuine decentralization. This kind of judicial reasoning builds actual guardrails.
So it's moving beyond just, is it a security or not, to a more nuanced legal analysis.
Exactly. It feels like a shift from a presumption of guilt, almost like everything's a security until proven innocent, towards applying existing legal principles in a more thoughtful, case-by-case way. That's a potentially fundamental change.
So, bottom line, this lawsuit dismissal, is it a sign that maybe, just maybe, crypto is starting to win more consistently in court? Creating that more stable ground everyone's been hoping for feels like it could be quite significant.
It certainly feels like a positive step in that direction, yeah.
Okay, so let's tie these two threads together now. We have the super ambitious $20 target for XRP, driven by its own specific factors. And we have this broader legal win for Bitcoin with the strategy Bitcoin dismissal. Why is it important that these are happening around the same time? What's the connection?
Well, it's the combined narrative power, Think about the optics. You've got XRP, a major player aiming for real-world utility, getting this massive moon target that grabs headlines, gets retail investors excited.
Yeah, feeds the speculation engine.
Right. But then, almost simultaneously, you have news that reinforces Bitcoin's legal standing, making the whole space feel safer and more legitimate, especially for institutions.
So excitement on one hand, security on the other.
Exactly. Both are bullish signals, but they appeal to different audiences, and having them hit together, it just amplifies the overall positive feeling in the market. It paints this picture of an industry that's both innovative and potentially explosive, and maturing on the legal front. That's a really potent mix.
It covers both bases, in a way.
Yeah. And that combination creates really fertile ground for ETFs, banks, and funds to deepen exposure.
Fertile ground.
How so?
Think like an institutional investor.
Yeah.
You're always weighing risk versus reward, right?
Standard procedure.
The lawsuit dismissal tackles the risk side. It makes crypto look less like the Wild West, more investable, easier to get past compliance.
De-risking.
Exactly. But then the bold price targets, like the $20 for XRP, highlight the reward side, the potential for massive upside.
So it's offering both reduced risk and high potential return. Precisely. It's like saying, hey, not only is this space getting safer and clearer legally, but there's also still this incredible growth potential here. That's a very attractive proposition for big money that's been hesitant. It gives them both the confidence to jump in and the potential gains to justify it. That's how you start to see real significant capital allocation.
And this really gets into investor psychology, doesn't it? How different groups react.
Totally. Our sources highlighted this. Retail thrives on bold predictions, $20 XRP, while institutions react to reduced legal risks.
Makes sense. The individual investor might see that $20 target and think, wow, life-changing money. The potential gain is the main driver.
Yeah, the dream of hitting it big. They might be less focused on the nitty-gritty legal stuff and more on the narrative, the tech, the price chart going up.
But the institution, they have a different mindset.
Completely different. They've got committees, compliance officers, fiduciary duties. They need stability. They need predictability. For them, a lawsuit dismissal is huge. It means less chance of regulatory blowback, less reputational damage. It ticks the safety boxes.
They're not chasing moonshots. They're looking for compliant growth.
Exactly. So you have these two engines running. Retail excitement fueled by big targets, and institutional confidence built on legal clarity. And the way those two interact, that's what really drives the market, moves the money, and creates these feedback loops.
It's a fascinating dynamic.
Yeah.
Okay, we're covering some really crucial ground here, linking these big stories.
Yeah.
And look, if you're finding this deep dive useful, if you appreciate us connecting these dots,
Yeah, definitely let us know.
please do us a quick favor, hit that like button, subscribe if you haven't already, and ring the notification bell. It honestly makes a huge difference.
It really does. Tells the algorithms people are watching, helps more people find the content.
And it lets us know we're on the right track so we can keep digging deep like this for you. Your engagement is seriously what fuels the channel. So thanks in advance for that.
Okay, so drilling down a bit. What does all this actually mean for different people in the market? For you, the listener, depending on how you're involved.
Yeah, let's make it practical.
Right, so for XRP holders, that $20 target obviously paints a picture of, potential explosive growth. It could feel very validating if you've been holding for a while.
Gives you a roadmap, maybe? Something to aim for?
Kind of. But, and this is crucial, holders need to be cautious of hype cycles. It's easy to get caught up in the excitement of a big number like $20.
Yeah, FOMO is real.
Totally. So while the fundamentals might be stronger now with utility and legal clarity, you still need to be realistic. Do your own research, manage your risk, don't just blindly follow the hype, maybe have a plan for taking profits if things do go parabolic. Balance the excitement with caution.
Sound advice. What about Bitcoin investors? How does this strategy Bitcoin dismissal affect them?
For them, it reinforces the narrative that Bitcoin is becoming safer for funds and corporations. Every legal win, every bit of regulatory clarity just makes Bitcoin look more like a mature, institutional-grade asset.
Like digital gold, but with fewer legal question marks.
Kind of, yeah. It makes it easier for a company treasurer, like at MicroStrategy, or a pension fund manager, to say, okay, putting a slice of our portfolio into Bitcoin isn't some crazy gamble anymore. It's a legitimate diversification play, a store of value. It strengthens its position as the bedrock digital asset.
Okay. And what about the traders, the ones looking for short-term moves?
Well, for them, all this volatility around XRP predictions, plus the general positive sentiment from legal wins, that combination could create massive swing opportunities.
Lots of ups and downs to play.
Exactly. Big price swings mean chances to get in and out for profit. But obviously that comes with huge risk too. Trading this kind of environment needs skill, discipline, serious risk management. It's definitely not for the faint of heart. You need to know what you're doing.
For sure. Okay, zooming out again. What's the impact on the bigger Web3 picture, the whole ecosystem?
Yeah, beyond just the price of coins.
First off, XRP's utility as a payments and settlement layer strengthens if the cycle targets materialize. If XRP is worth $20, it has a much larger market cap, which means more liquidity.
And liquidity is king for Cross-border payments, right. Need deep pools to move large amounts efficiently.
Exactly. A higher price makes it a more robust tool for banks and payment providers using ODL. It gives it more legitimacy, makes it look less like a small altcoin and more like a serious piece of financial plumbing that could accelerate its actual use in moving money globally.
Makes sense. More value equals more perceived reliability.
Then for Bitcoin, its institutional legitimacy rises every time lawsuits are dismissed or ETFs gain traction. Each win, each approval, it's another step away from the fringes and towards the mainstream.
Cementing its place in the traditional financial world.
Pretty much. It builds trust, reduces the perceived risk for big players, and encourages wider adoption, maybe even as a reserve asset someday. It just makes it more normal.
And tying it all together for Web3, this is where it gets really interesting. Legal clarity accelerates the Web3 adoption cycle. Less fear around regulation, more focus on building.
So, less fear leads to more building.
Think about it. If you're a developer, an entrepreneur, even a big company wanting to build something on a blockchain, regulatory uncertainty is terrifying.
Yeah, you don't want to pour resources into something that might get shut down.
Exactly. You worry about lawsuits, fines, unclear rules. That fear holds back innovation. People might move jurisdictions or just not start projects at all. When you remove that fear, or at least reduce it significantly, people can focus their energy on actually building cool stuff.
Decentralized apps, new protocols, better user experiences.
All of it. Less time worrying about lawyers, more time coding and creating value. This clearer legal environment could really unleash the next wave of Web3 innovation, moving beyond just finance into gaming, social media, identity, all the things people have been talking about.
So legal clarity isn't just good for investors, it's good for the actual tech development too.
Absolutely critical. It creates the stable foundation needed for the ecosystem to truly flourish. It's the kind of thing the IMF and BIS are studying. How do you create rules that support this innovation safely?
This isn't just theory, though. We've seen this dynamic legal clarity boosting confidence driving markets play out before. We have some real-world examples.
Oh, definitely. History gives us some great case studies. The most obvious one, which we keep coming back to, is the Ripple versus SEC lawsuit outcome itself.
The Judge Torres ruling.
Right. That partial victory for Ripple in July 2023, declaring XRP sales on secondary markets weren't necessarily securities offerings, that redefined XRP's U.S. regulatory status. It was huge.
Because it pushed back against the SEC's broad approach.
Exactly. It suggested nuance was possible, that not every token is automatically a security depending on how it's sold or used. That sent ripples of relief, okay, pun maybe intended that time, through the market. It provided a specific, powerful example of legal clarity impacting an asset standing.
Okay, what else?
Well, look at MicroStrategy. Michael Saylor basically bet the company on Bitcoin, accumulating a massive treasury holding. That's pure institutional conviction on display.
They just kept buying through thick and thin.
Right. Showing a long-term belief regardless of volatility. But then contrast that with Tesla's BTC purchase and sell-off.
Yeah, they bought big, caused a stir, then sold a chunk.
Their initial buy was a massive signal of mainstream adoption. But the sell-off, while they mentioned environmental reasons, also happened during a period of, let's say, heightened regulatory chatter in the U.S. It kind of shows how legal regulatory clarity influences corporate strategies. Even for someone like Musk, the broader legal environment seems to play a role. It highlights that sensitivity.
Interesting comparison.
Yeah.
Any others?
Yeah, the Ethereum ETF approvals, or partial approvals really, leading up to that decision in May 2024, there was growing confidence that ETH wouldn't be classified as a security, plus its successful tech upgrade to proof of stake.
Reduce the regulatory worries.
Seemed to. And we saw that momentum build, market interest surge, leading to significant inflows once the ETFs got the green lights. Another clear case, get the legal regulatory ducks in a row, and the institutional money feels much more comfortable coming in.
So clarity equals inflows.
Often, yeah. But we have to mention the flip side, too, the cautionary tale.
Okay.
The Luna Terra collapse back in May 2022. That was a brutal example of how lawsuits and regulation impact market trust, or rather, what happens when they're lacking.
Yeah, that was a disaster. Wiped out billions.
Totally. An algorithmic stablecoin failed spectacularly. Investigations, lawsuits, founders facing charges. It absolutely cratered trust across the entire crypto space. It showed the devastating consequences when oversight is weak, when regulations aren't clear or strong enough, and when projects implode under scrutiny. It's the nightmare scenario that underscores why institutions demand clarity and robust frameworks. It shows the dark side.
A very important counterpoint.
Mm-hmm.
Okay, so these stories illustrate the dynamics. But if someone wants to track this themselves, what data should they look at? What metrics help cut through the noise?
Good question. For a deeper dive, several metrics are key. First, really analyze those XRP long-term price cycles. Don't just say history repeats, look at the details.
Like the actual percentage gains in 17 and 21?
Yeah, map them out, look at the cycle lengths, then apply those technical tools we mentioned, like Fibonacci extensions from major lows to highs, to see where those projections, like $20, actually come from mathematically. It gives you a framework.
Makes the target seem less arbitrary.
Exactly. Then really dig into the market cap math for $20 XRP. We did it quickly, but lay it out. $1.1 trillion. Now compare that explicitly. Put it next to Bitcoin's peak cap, Ethereum's peak, gold's total value, maybe even estimate a fraction of the daily FX market volume. Visualizing that scale makes you really grapple with what it implies.
It's in context.
For sure. Then you absolutely have to track XRP versus BTC versus ETH inflows, watch those CoinShares reports, or similar data sources.
See where the institutional money is actually going.
Precisely. Are funds flowing into XRP products consistently? Or is it still mostly BTC and ETH? That tells you a lot about real institutional conviction versus just retail hype. Following the money is critical.
Okay, what else?
I really like the idea of court legal timeline charts. Literally plot major legal events like the Ripple ruling, maybe this strategy Bitcoin dismissal onto a price chart for XRP and Bitcoin.
So you can visually see the correlation. Price jumps after good legal news.
Yeah. It makes that connection between legal clarity and market reaction undeniable. You can see cause and effect right there on the chart. It validates the whole narrative we've been discussing.
That's powerful. One more.
Finally, and this is crucial for utility arguments, on-chain volume and activity for XRP. You need to try and measure XRP ledger activity versus speculation-driven spikes.
So real use versus just trading on exchanges.
Exactly. Is the volume of XRP being used for on-demand liquidity actually growing? Are transaction counts on the ledger increasing sustainably? Or is it just exchange volume pumping during price run-ups? Real, sustained on-chain utility would provide fundamental support for a higher valuation, distinct from pure speculative mania. It tells you if the network is actually doing what it's supposed to do. That's key for the long-term $20 thesis. Hashtag tag outro.
Wow. Okay, that was intense. In the best way possible. We really covered a lot today. That huge $20 XRP target, the importance of the strategy Bitcoin lawsuit dismissal.
And how they really weave together.
Yeah, how that combination is boosting confidence, especially for institutions, and what it all means for the crypto ecosystem as a whole. It's just amazing how interconnected everything is in this space.
Definitely. And hopefully by digging into these narratives, getting past the headlines, you feel like you've got that shortcut now, a better handle on the underlying forces shaping crypto's future.
Yeah, the goal is always to empower you, our listeners, with the context to make sense of it all.
To navigate it with a bit more clarity, a bit more confidence.
Absolutely. It's not just about knowing what's happening, but understanding why it matters.
Okay.
So as we wrap up this deep dive, I want to leave you with a couple of thoughts to chew on based on everything we talked about.
Okay.
First, thinking about those cycles, the utility argument, the legal clarity. Would you personally bet on XRP hitting that $20 mark in the next cycle? Or does sticking with the established players like Bitcoin and Ethereum feel like the safer, smarter play for you?
Interesting question. Risk versus reward.
Right. Exactly. And maybe the bigger picture question. If XRP does somehow reach $20, hitting that multi-trillion-dollar valuation we talked about, does that fundamentally rewrite the rules of global finance? Does it signal a permanent shift in power away from the old systems?
Heavy stuff to ponder.
It is. Something to think about until next time.
Thanks for joining us on the deep dive.
Yeah, thanks everyone. Catch you on the next one.